So Gavin, it's good to be with you here at the African Global Payment Summit here in Sandton, just outside or in Johannesburg, I guess, and you're about to go and chair the final session of the conference. So what are your thoughts that we could share with the League of Professionals?
Well, first of all, David, I'm glad that I came. I'm quite critical of conferences these days being more of the same, but I must say that I have actually learned stuff over the last 2 days, some very exciting stuff and some stuff a little disappointing. I want to joke that this is the first time in about 5 years that I've had a suit on. And it
fits you pretty well.
I just fit into it, which says that not much has changed in 5 years. And actually, if I look at what's happening at this conference, that's my only criticism from the audience and from what we're hearing is that over 5 years, not much has changed. There are some exciting things, and I think what's happening is there seems to be a bubbling point or something that's about to change, specifically in the South African payment systems.
Mm-hmm.
And perhaps you'll know more about this regulatory change that they're considering that is causing the existing participants in the payment system to rally and to come up with futuristic plans and solutions and to look for ways that they can grab the next 10% of cash in the market and look at that from a more inclusive perspective. Unfortunately, what we're seeing is still quite a protectorate approach to it. So it's still very closed, still very much to do with the existing major participants in the banking sector, still not much to do with opening up to non-bank payment participants, etc. And I found that disappointing. I found it disappointing that a lot of the rhetoric was all about how do we take our existing banks to that next level instead of how do we actually create products and services that the consumers needs. I think that there's maybe selective ignorance to the opportunity that disruptive fintech can bring in. Right. So what we see.
And there have been some here, right? There's some people participating in conversations, but not the majority.
Yeah, no, definitely. The majority hasn't been. And also the majority view is almost a tepid nod because they feel that they need to, as opposed to the SADC region feeling that they should actually take these things seriously and they should embrace it. I think what was said in the conference was quite right. When we look at India and we look at China and even Kenya, what has happened in those environments, it took either a gap in policy and or regulation or specific push from the government to guide the system to open up.
Yeah, or also standing aside, right? And in some cases, a total standing aside that might be closer to the Kenyan story.
The Kenyan story, yeah.
But yes, in the other cases, definitely more than that. I would agree with you.
Yeah.
And just on that, Gavin, one quick thing is for those in the league who've done the course, it certainly confirmed our view that the leading digital markets are, in fact, the ones that have been considered here are the ones that we cover in the course, right?
Yeah.
China, India, East Africa is referred to frequently as a challenge. And of course, there's always reference to Silicon Valley type entities in the background.
Yeah.
Libra came up.
So I think what we're seeing here is that industry in SADC, the payments industry in SADC is looking at this from the perspective of let's take existing proven strong regulated rails and let's use those rails to get better at what we do and to expand. I would have preferred industry saying, yes, let's do that. And let's trial some new models, some new ways that we can get to these new markets. And let's maybe embrace a more innovative approach to, or expansionist approach to what we're doing. And so for me, the gap in the conference was where is the voice of the regulators, right? And I think that's where we're getting to. I think what we're getting to is exhaustion from the government's perspective in terms of waiting for the industry to move.
Right.
We're very advanced in South African payments, but yet we still have 80 or 90% cash, and there's still so much more we can do. Maybe it is time that we have a little bit of a stronger hand coming from government to help them nudge things along.
And in fact, I was interested to know your view. The only presence directly of the regulator in the last 2 days was the conversation by Johan Benz, who's the head of currency management at the SARB, talking about the surprising openness. I thought, at least I was surprised by the openness to saying we will be investigating the feasibility of a central bank issued digital currency, not as a substitute for cash, as a complement. And what I heard him saying is it's coming. We don't want to lead this, but we definitely are going to be up there among, as he said, the follower banks doing this sort of thing, which to me was actually quite good to hear.
It was a very refreshing,
Yes.
very refreshing presentation. In his own admittance, he'd been working there for 40 years. So it's not what I expected coming from a central banker that had been working for 40 years. But also the way that he explained that their approach to it is that this is quite normal, right? So this new technology might be a new technology, but it's not a new thing for a central bank. It really does cover what we do every single day with physical cash, just in a digital format, or in a crypto format. So his whole point was, this is not new and it's a little bit obvious. Now that actually gets me excited. How do we have a central banker, policy maker, sitting up there 40 years in the industry talking about the forefront of innovation, but an industry talking about repackaging what they do in order to get to the next 10%. So that was exciting for me. That said to me that we actually do have hope here. We do have hope.
Well, you know what that conversation with Johan and the Saab opens up is the central bank issued digital currency. When he was questioned, there are numerous issues around how it would work, and they haven't answered them. The biggest issue is the use case, right? What it would work for, and he just touched very briefly on it, but I think he put his finger on the nub of what's being wrestled with here, which is how do you create interoperability? And the South African story has been about elaborate industry mechanisms, which are among the world's most developed in many ways, benchmarked against peers in Canada and Australia and so on, and yet have somehow gridlocked around innovation until recently. And so the central bank holding the right to issue a digital currency, which would compete with bank-issued digital currency, the only digital currency that's out there today, is almost like saying, if we can't make progress, this would be a use case. We will use it to allow whoever we choose as issuers, or at least as distributors of the digital currency, to participate.
And if they get it right, then I think, again, you'll find South Africa at the forefront of the topic of interoperability.
The new generation of it.
The new generation of it. I think what specifically South Africa needs to, take ownership of now is that the country's been at the forefront of payments for many, many years. And I think this protectionist nature that it has is now putting it as not even a close follower, but a far behind follower of the Indias and the Chinas and the real leading markets that we see around the world. So there's some catching up to do. As advanced as the infrastructure might be here, I think there's some catching up to do in terms of embracing new technologies, new rails, figuring out what next to do. I saw another point when we expand to SADC and these conversations about the region and the region's payments and how they're getting there. I think what I got from the conference finally is a sense of some momentum in all of those exercises. We see systems switching on, agreements being put in place. We see the strong hand of presidents coming in and saying we need to move faster, let's do these things properly, announcements being made, signatures being put on paper. And so, finally you see some kind of at least administrative momentum and some systems going live in SADC. But a very real tension emerged very clearly and eloquently articulated by the BankServe chap, is that, sovereignty is both a problem and a solution.
Yeah, it comes at a price. Right?
It comes at a price. And exactly, in fact, that was his exact point, sovereignty comes at a price. We can look at SADC from a shared infrastructure basis where that price is not going to be too bad. Or we can look at SADC from a multiple sovereign infrastructures basis, and that price is going to outprice most of those SADC countries. So most of those SADC countries don't have the volume to justify the business models for the private sector to come in and invest in that infrastructure. And so it's going to have to be up to those governments to invest in that infrastructure if they want it sovereign, or somehow we've got to find another way to get around the sovereignty issue.
Yeah, and that does seem to need the elevation to another level of decision making, because what I was hearing is how SADC, 15 countries, 14, 15, enormously complicated. And although there's been this good intent for quite a while, it's been very slow progress, right? And so for me, one of the chilling reminders, and it's always a good reminder in payment system work, is that build it and they will come is not a proposition. You know, so in the example we heard of the SADC EFT thing, it's been built, enormous investment of effort and energy and all that, not a single transaction yet. Now they're building a new infrastructure, this TCIB, the instant payment one, that sounds really interesting and promising, but back to this thing about, you know, will they come and what are the conditions that will mean that they'll come? And the pricing of the infrastructure is going to be a part, the branding, the push, the business case of the members, bank and non-bank,
Right.
will clearly matter.
Right. So you hear this warm and fuzzy mission statement to say, we want to get to the next 10% in cash. We also want to get to the next level in terms of financial inclusion. What we need is we almost need near free or highly subsidized transaction costs to the end consumers.
Yeah.
There was lots of challenge of the interchange model and the cost of doing business with SMEs and all that kind of stuff on the one hand. And then on the other hand, there's this big push for very complex, very expensive infrastructure on a per country basis. And there's a clear mismatch there.
Right.
There is a clear mismatch. Good noises though, listening to, I am a South African consumer, I pay 50 Rand to have a real-time
So
transaction.
you're one of the, we heard someone say that, so you
Yeah.
are in that league.
So
right?
in order for me to send money to you directly and fast and immediately, I have to pay 50 Rand for that transaction. So that's around
But you know
$3.
what I heard though, just on that, is the good news, if you like, is that while that's the norm among bigger banks, the new challenger banks are putting the same instrument in at 0 or 8 Rand. So 1/4 or 1/8, 1/6 of the pricing that has previously been the case. So back to your point earlier, it's kind of when new entrants come in with a different business model, then things can get shaken up.
And it's how they're doing it though.
By bundling or what?
They're doing it by sorted source, right? Which is something that that the South African payment system has a policy against sorted source
because from the SARB,
because it breaks down interchange, it breaks down the incentives for the acquiring business. Right. But if you need to serve a customer that can hardly pay the 8 Rand fee, how are you going to do so at the 50 Rand fee?
Right.
But the other piece of good news that, so you're right, the challenger banks that are coming in is exciting, or to see what they achieve. The other good news is that you start hearing this rhetoric about 40 Rand cost for an RTGS transaction is not good enough.
Right.
And that there isn't a reason why it should be at that level and we need to start reducing it. And the more that we reduce it, so that Project Future says that yes, if we can bring down those kind of costs, we can start introducing these the next 10%. So there's a good intention there.
Sure.
There's real good intention in bringing down the cost of real-time payments. But for what reason and why now? Is it the challenger banks that's coming in? Is it this pending potential regulatory change that all of a sudden they're realizing if we don't move as an industry, the carpet's going to be pulled out from underneath us, which either way is good news. It's not, the carpet isn't the good news, it's the fact that they're responding to industry pressure to provide services to the next set of people.
Yes, I agree. That's what makes it actually really interesting and challenging to watch the space. You know, in Project Future, you mentioned that as an example of, I guess it took a year, 18 months, but this was a visioning landscaping exercise done across at least the PASA membership, which is banks, although they seem to consult more widely than that. Just a thing for our students or the leagues of professionals out there is the value of creating alignment around the future vision is strong. Now, that doesn't mean every country should do Project Futures, but some version of that creates some sense of a longer term, where we're going to, and is there space in it for everyone? Because as I've heard several people tell me, one of the challenges is the parts just don't fit together. If regulators have an expectation of free payments, if banks have a risk aversity linked to the enforcement of certain things, especially AML, CFT, that just doesn't equal a business case. And at the moment, it's those who are not subject to the regulation, the non-banks, who are finding their way through the cracks like they have everywhere. But that can't be a long-run sustainable solution alone. There has to be something beyond that as a steady state, and maybe digital currency will change the whole nature of that steady state from the way we know it today.
Maybe it will. I think all in, a good event. Lots of exciting things happening in SADC. one to watch. And I think, perhaps if not as soon as a year, within the next couple years, I think that there's something seismic that's going to happen, whether it's this regulatory change or the challenger banks or this regional infrastructure actually going on live and being put to good use. It feels like something's fiddling, and if we have this conversation again in a year to 2 years' time, that it will feel differently. And hopefully that means my suit's too big for me and things have changed. Not that
you'll have a different
small.
tie. It goes with this updated territory. That's great. Yeah, it's been good to be here.